All right, guys, welcome back to the show, the Mogul Marathon Real Estate Podcast. I am your host, Yannik, Cudjoe-Virgil, and I'm super excited for our guest today. Our guest today is Chris Mfume. Chris is a founder of CLD Partners, a real estate investment and development and asset management firm focused in the Mid-Atlantic market. CLD provides sustainable, well-designed, thoughtful program spaces across workforce housing, mixed-use income housing, affordable and market rate housing. And so as a managing partner, rather, Chris Mfume is responsible for leading all development and investment activities and guiding the firm's projects through inception to completion. Chris, welcome to the show.
Thanks for having me, Yannik. Really appreciate it.
So a little bit of backstory, I met Chris really off Clubhouse couple of years ago, I want to say. And so we connected offline, and I thought that he was really a sharp guy. He has an interesting background. And, Chris, I'd love for you to give the listeners a little quick insight on your story and how you got to where you are today.
Sure. So my real estate career really started in DC. I graduated from college down in North Carolina back in 2012. Immediately moved to DC, started taking a job there, working in the Navy Yard. And what I got to really see is how that area has transformed. If you're familiar with DC at all, the Navy Yard is the most dense residential neighborhood. And I really got to see this neighborhood go from being an old industrial basic kind of wasteland to this thriving mixed use area. I wanted to figure out how to be a part of that, decided I wanted to get into real estate, then subsequently decided I wanted to get into development, and quickly realized that it was not the easiest path to take. I got laughed out of a lot of rooms when I told them I just wanted to hop right into it. You need 10 years experience. And of course, it's like the chicken or the egg thing. How do I get the experience? You won't hire me, that type of deal. So I immediately started working at trying to make myself more valuable. So I did that in a couple ways. I started a class at ULI where I learned how to model. So I taught myself how to model, which was a big thing, I guess, like a big theme throughout my career, would be taking initiative and trying to add value to other people. Number two, I started working at Vornado. I started temping there in their acquisitions department, just trying to teach as much as possible and just improve my toolkit. After that, I went to a couple events, and there was a guy speaking. His name was Michael Beatty, who ended up being my first boss. And he was speaking about a big project he was taking on in Baltimore. I ended up pulling him aside afterwards, asking him, just kind of telling him I wanted to learn more about real estate. He invited me to the office. We ended up meeting, and that became the first meeting, the start of me chasing him around for actually 7 months, showing up basically everywhere he was, stalking him essentially. And every time I'd see him, I'd shake his hand. At the time, he was going through some city approvals, and he had like 12 hearings. So I stayed for the whole hearing, which would be 2-3 hours, not be able to speak to him or anything like that, and just shake his hand at the end. Good job, Mr. Beatty. Good job, Mr. Beatty. Really enjoyed it. And at the last hearing, he was like, "You're not going to leave me alone, are you?" I was like, "I'm not." He's like, "You should come work for me." And then I went to go work for him, and it became a beautiful, beautiful mentorship, apprenticeship type of situation where he really taught me the ins and outs of the business, and I got to do everything nobody else wanted to do, which is all the stuff you need to do in order to really learn the business. So that's how I got here.
That's, it's funny that I think that we have somewhat of a similar story, because for me too, I didn't go to school for real estate. I went to school for kinesiology, something that has nothing to do with real estate. And like, I kept getting rejected from the big shops like CoStar, some private equity firms, because I had nothing on my resume. And so for me, it was kind of like the same hustle of like, I wanted to get that start in commercial real estate, but I really didn't have the experience, right? So it just came down to persistency and just hunger, right? Figuring out like who are the players in the area and go work for them, right? Because that's probably the best way to accelerate that learning curve, which a lot of people struggle with when getting into commercial real estate. Is that the same kind of mentality that you had too?
Exact same mentality. I mean, the best way to learn is finding an expert in the space and just we're not trying to recreate the wheel here, right? People have had success in this career previously. What have they done? Let's see if we can follow those steps. And I think that's the quickest way to get there and accelerate your career.
The word persistency really just rings when I hear you just talk about like your story, because a lot of people, they want to get into the real estate space, specifically maybe development, and they just say, well, I can't do it because I don't have this or I don't have that. But the quickest way I think to go forward, in anything that you do, like you said, is just to latch on to someone who's actually done it before, because real estate development it's a tough industry to break in,
Right.
and especially when you don't have the credentials, you can't really stick out, So kudos to you and your hustle and your drive to actually get to that step. So, what caused you to transition to start your own firm? Why not just stick it out and kind of listen to what folks have said, stay in real estate development for 10 years and then go start your shop? What was that moment that made you change that thought process?
So for as far back as I can remember, I've always wanted to be an entrepreneur. I think since I was 11, my dad would have me reading Black Enterprise, and I wouldn't really understand or anything like that. And I really did not get it then. I didn't even know it was making an impression. But as I got older, I had this thought in my head that I wanted to be an entrepreneur, and I don't even really know where it was planted. But my guess is that it came from those type of moments, those type of conversations. So I remember looking at Black Enterprise had a BE 100, like top 100 companies. And I remember two people standing out. There was a guy named Tom Moorhead, who runs a whole bunch of dealerships out of Virginia. He was the largest Black-owned car dealer in the country. So that was a dream of mine also. And then the second one was Don Peebles, who had ran up, I think, about 700 million at that point in Black Enterprise. And I remember I'm like, okay, well, I want to be an entrepreneur because ownership is the only way to really start to reach these upper echelons of financial freedom. So that's always been a goal. I went to go work for Michael that first job, and I told him from day one, hey, look, I want to be you. Like, I want to develop into the type of person that does actually what you do. I'm not going to be here forever. But if that's okay, I'm going to hustle for you as hard as possible here. I don't care how much you pay me. I'm just here to really learn. And I actually told him that I consider my time with you. Am I going to get access to you? That was an important thing. Am I going to be able to speak to you? How often am I going to be able to do that? Because that to me is a part of my compensation. That's better than money in a lot of situations. And so I told him that, and right away, to his credit, I mean, he threw me to the Sharks right away, had me modeling, had me running huge deals like Old Town Mall. We had 2,000 units that he had me managing right off the bat. The guy with, straight out of nowhere, basically helping manage these projects for him. And, he counted on me to learn along the way. So I've always kind of had the entrepreneurial bug. I didn't know how I was going to get there, but we also talked earlier about really looking at other people's careers and modeling off of that. I had read Don Peebles' book. He did it. Barry Sternlicht, Stephen Ross. Herman Russell. There's just so many different people that have done it before us. And once you start reading, the success really leaves clues, right? Almost every single person that's successful follows like the same, like five or six principles. It's really not as much of a mystery once you start to read these books and these themes pop up over and over again. Persistence. There's just so many different things. Success leaves clues.
Yeah, and I like to, recently I've been giving the analogy of like the Wildcat, right? Since I'm a former football player, right? You remember the Wildcat back in 2006? Sure. The Miami Dolphins started running it, and then everybody, even in high school, we were running the Wildcat, right? Back in 06, 07. And what you said about success leaving clues, it's expensive to reinvent the wheel, right? It's expensive and time consuming to like butt your head on something which someone probably along the way already did. And so trying to like spend time and money with regards to reinventing the wheel and just doing things on your own, I honestly feel like that's the biggest way to incur a lot of pain and waste a lot of time. Similar to, your thought process of getting in with a shop and just learning the business is something that I did as well. And I think that education is, when you're starting off in the world of commercial real estate, especially when you don't have that background, like education is the best form of currency. And so a lot of people, they might jump into the game and their thought process is, I want to make a bunch of money. I want to do the biggest deal. I want to get money. But I've found that when you focus on just educating yourself, at least for 1 year, and attaching yourself to someone who has done it, that can probably put you like 2x the time ahead of the curve. Whereas if you would have tried to do it all by yourself, you would probably be, much less behind, or like I said, incur, a lot of pain. What are your thoughts on that?
Yeah, I completely agree. I mean, look, there are so many less excuses today, in my opinion, because you can go on YouTube and you can learn pretty much anything.
The good old YouTube University.
Yeah, YouTube University. You can lose yourself for hours. I mean, you could teach yourself. If you want to become an electrician right now, you go to YouTube. I guarantee you type in "want to become an electrician." You're going to get, 100 videos on how to do it. And there's so many resources. So I really just think we have any excuse. I mean, there's books, there's mentors, there's all these people. I know this is the approach that you've had. You talk to people in the business and you learn something. I mean, no matter where you're at, I talk to people. I just got out of a lunch talking to a friend who is buying up value add acquisitions, like 10 unit here and there, but he's got some stuff figured out that people who own these big buildings don't have figured out. The sexy thing with these big buildings is, I've got this big property, but they end up owning, 2% of the big property. Whereas this guy, he's got the 10 units and he's owning 50%, and he's making way more money than these guys who are doing the sexy stuff. So
you're gonna touch a lot of buttons with that one.
I'm just being real, man. I mean, what are we really here for? Are we in here for the accolades and people patting your back, or is it really, to have a profitable business? I know what I'm here for, so there's just so much to learn and so many resources.
100%. I 100% agree. So let's talk about, you touched on YouTube University, right? And that's something that I've used in my own journey to commercial real estate. YouTube University, looking at courses like, in this day and age, how do you get started in real estate development? What do you think is the best way to get started?
Yeah, so the best way I would say it's very similar to how I got started, which was find somebody who's been there before. Don't recreate the wheel. So you find somebody that you admire their work. I did the same thing. Where I'm sitting right now, actually, my former boss developed basically this whole neighborhood. And I had admired him, and I would just show up to events that he was at. If he was speaking, I'd show up there, and that's how I met him. And I told him I admired what he was doing. I'd love to learn more. You can really do that with any of these people. They will really appreciate it. I know a lot of people are afraid to approach, but these people who have done these great things, one, love giving back, and two, they love when you take initiative. So when you take the initiative to ask somebody, people approach me all the time about learning about development. I always take the meeting because that's what it's about. Somebody did that for me. I wouldn't be here if it wasn't for that. So that's the quickest way to accelerate it.
100%. 100%. A lot of people try to find the easy way out, and real estate development, I'm in acquisitions, I've never developed anything from the ground up yet, but real estate development is a whole separate beast. And if you don't know what you are doing in real estate development, you will get hurt. When I used to work for a firm, they used to always say, you get hurt in the dirt. And so, with respect to the context of real estate development, the topic that we're on right now, for people who are trying to get into that space, what are the best ways to reduce risk when jumping into real estate development?
Yeah, so we do a couple things. You're completely right about getting hurt in the dirt. I mean, that's where your real cost overruns will come. But I think it all starts first at the land acquisition. We have not bought a piece of land until we are ready to develop it. So we've optioned basically everything. So we'll put an option contract on something. We have a piece of land in DC. We're trying to do affordable housing in.
So talk a little bit about, for listeners who don't know, what an option contract is.
Right. And so what we will do is we will give you a price. We will either pay your full price or maybe give you a little bit more. But what we want is the optionality to go through whatever approvals and entitlements we need to do before we buy the land. And so in that situation, why would a seller do it? One, they're going to get either their full price, which people are going to, lowball them ahead of time, or they're going to get extra money. And two, that gives us time to be able to go through approvals, get whatever funding, line up whatever funding we need to do. And it gives us flexibility. What you don't want to do is carry land, because land eats 3 meals a day. So that's one thing that you definitely don't want to do. Two is you make your money in the buy. You still want to buy at a competitive basis. And so your plan needs to be commensurate with the low land price. And there's a couple ways you can do that. Sometimes we have smaller units than what somebody else will put there. If it's an existing asset, we'll be able to add a bedroom, or there's some type of value add there that other people didn't see. So we make sure that we're not getting ourselves in trouble by paying too much for a property.
So it's really focused on, from a reduction of risk perspective, your number one focus should be on the due diligence side of things, right? Yes. Similar to probably just all real estate, just figuring out more specifically when you're developing dirt is knowing exactly what you're getting into, right? From talking to your civil engineers, to your geotechnicals, making sure that the dirt isn't soft, is that, stuff like that. Are you looking at that too when you're evaluating these opportunities during due diligence?
Yeah, so a couple of things we do on the dirt side, as far as we always get a geotech out there early. We go do soil boring. So we'll have somebody bring out a big rig, and they'll come out and they'll go 15, 20 feet into the ground to tell us from the soil. We'll go get the soil tested. And then from there, we'll find out if there's anything environmental that we need to worry about on a site like that. So that's super, super important. Getting your phase 1 and your phase 2 are super important as well. So we just make sure that you have a great due diligence process. We have an outline process that we follow on every single project that's programmatic. If we don't check all those boxes, we're not buying the property.
And that, I think that comes with, number one, expertise, right? And just being structured. My model is, if I'm doing something consistently, I want to make sure that I have a structure, specifically due diligence, right? And when you're raising capital, when you have, how much dollars, down on this, deposit, right? A lot of that capital may or not be hard, non-refundable, right?
Yeah.
But the cost that you incur, and that's why they say, pre-development is probably the riskiest part, right? With when you find, a raw piece of dirt, going through the entitlements. I mean, that's the riskiest in real estate development, right?
Yeah.
And so I think, understanding the due diligence process is probably the number one phase of just the actual physical part of real estate development. Would you say, in addition to, obviously, you need to know how to underwrite and model and project and do all the basic things that you have learned from the ULI courses that you took to, when you were getting into the space. But due diligence is something that we preach and we teach all of the time about, the importance of that in real estate acquisitions. So I would imagine that in order for you to, or, with respect to your success today, you were able to develop great teammates, great partners. Talk about the importance of, having good partners, finding those contractors or finding those professionals that help you be successful in the real estate development space.
Yeah, I think that the number one thing you can do is find good partners. A partnership is really a marriage. You are going to be with this person in real estate development for 2 to 3 years at minimum. That's really the quickest you can build a building, entitle it, get it leased up. Usually it's going to be 5, and a lot of times it's more than that. And so you really need to choose smartly. One, make sure your temperaments match. I mean, that's a big thing. Make sure you guys can work together, that your work styles make sense, that you guys complement each other, and it's not, adversarial. We've all been in a bad partnership, and it's not a good thing, and you can't get out of it easily. There's no easy unraveling it without the pain, right? So that's one. 2, make sure that they have the experience. Really make sure. There's a lot of people out here, I'm probably ruffling a lot of feathers, but there's a lot of people out here that have pretend experience. you have to be careful about that. So make sure that you talk through what the person's done, and you can tell immediately whether or not they're the real deal, whether or not they've actually done it, whether or not they've been in the weeds. That stuff is super, super important. And then 3, references. Who else knows this person? You know, what have other people's experience been with them? Most likely, if somebody isn't a great person to work with, it's not a secret. You know, you can ask around and you can figure it out. You don't want to take everybody's advice, right? But I would just say you want to do your due diligence and make sure there's somebody you can work with, and make sure you're both bringing something to the table. Me personally, I don't like any partnership where I don't feel like I'm pulling my weight. You know, then I'm not going to feel good in the partnership, and I may act up. You know, so I need to be in a place where I feel like I'm an adequate part of the partnership and I'm really pulling my own weight.
Partnerships, like you said, are are like marriages, easy to get into, hard to get out of.
Yes.
And you know, it brings me back to a story, like my first deal back when I was fixing and flipping like 4 years ago. You know, I hired a mentor that I thought was, you know, I thought that he was legit, right? I thought that, you know, he had this meetup and he had all this clout in the area and people kept talking about him. And it turned out to be the best lesson I've had in real estate, but the worst deal I've done in real estate, because I ended up losing money on that deal. He didn't do exactly what he said he was going to do. He was too busy with other stuff. I mean, everything occurred on that deal. And so I think the partnerships is something that people need to really focus on and pay attention to, especially from the due diligence process of not only just learning that personality, because everyone can't work with each other, right?
Right.
But I think when you have those discussions up front and you understand, you know, what this person's true nature is, and you know, what true experience do they have and what they can actually bring to the table, and just have those free discussions. I think that's the best way to naturally build a healthy partnership for you guys to go out there and be successful. Because like you said, there are a lot of pretenders in the real estate space. I mean, there are, you know, and so the hard part is taking what's on things like social media and digging through that and figuring out, you know, is this person who they say that they are, right? That's something that's tough to do, but the only way to actually do it is to have those conversations, you know. So talk about, you know, finding the best professionals that help you be successful in this space. You know, if someone is looking for like an architect, are there some tips that you use to find good architects, solid, you know, geotechnical providers? You know, how do you find those contractors and those professionals to help you be successful?
Yeah. So just to touch on, I mean, we even just talked about the partnership thing. One of the professionals you need in your team is a good attorney. Make sure you get your attorney stuff done quickly, early in the partnership, lay out whose role is what, so that it's clear, so you don't have to do that down the road. I've seen a lot of things go left because the expectations weren't necessarily there. But on the architecture side, one, I look at previous work. That's always the best, you know, predictor of what the future will be. Two, I look at, and I've had a habit of hiring a lot of up and coming architects. I mean, I've been an up and coming developer this whole time, and so I've tried to do my best. If I see somebody talented that I think, you know, has a real future, I make sure I vet them. I make sure that they have done the work before, maybe for somebody else. But a lot of times it's funny, you'll go to a bank. I'll go to a bank with a new architect, right? And this new architect could have been at a large firm, Horcope and Mock, or one of these big residential firms. And the bank will say, well, we're not going to hire them because they're a new architecture firm. But this person was the actual person doing all the work for these huge deals at this other firm, and the bank won't be able to wrap their head around it. So I've made a habit of saying, hey, look, what is their actual experience? What did you do at this large firm? Okay, you were running the day-to-day of 6 jobs. You know, you built 8 buildings already. Like, you were the person actually doing the work. Okay, well, that's good enough for me. You know, just because there's a different name in front of it and it's your own company doesn't mean that you don't have the skill set. So I've been really particular about that. A lot of referrals from people in terms of like the engineering team, the MEP engineer, the civil. I always go with somebody who is well known, who knows how to get through whatever municipality it is. That's another very important thing. So we're doing work in DC, and I may not use the same person that I would use on a Baltimore deal, because this person in DC knows a specific person in the permitting office that we need to get our questions answered quickly and accelerate our permit process. So being strategic about who you choose and what relationships they have is super, super, super important. So a lot of referrals, a lot of experience. And in terms of contractors, that is a totally it's its own beast, trying to figure out the contractor equation. And the best thing
that's our favorite part of this business, right? Finding good contractors.
The best thing there, I would say, referrals weigh even heavier there, because there's so much smoke and mirrors in that game that you just don't know. You can choose the person with the lowest bid, and that may not always be a good thing, because if you don't have the real expertise to be able to look through and tell where their bid isn't right, which candidly most people don't, like, you really have to be in the weeds to be able to really go through one of these estimates and see, you know, where everything's hidden. So that is a strong referral business. And with any of my teams, I try to do repeat business, because you spend so much time trying to find good people that I'd rather just pick up and stay with those people and keep it going, because that whole process can take 6 months, just, you know, finding good people. You don't want to keep doing that. You want to rinse and repeat if you got something that's working.
This business is all about relationships, and that's the same thing that I do as well with, you know, on the case of contractors too, right? Because you work so hard to find someone good that you can trust, that has experience, that has that can actually deliver, and then being able to give them constant work would probably does it work for you as far as pricing as well? Do they tend to give you better pricing when you give them, you know, consistent work as well?
Yeah. So once a contractor knows that we will execute, we will close, you start getting a little bit better pricing. That's always been a good thing. And we've even offered contractors chances to invest with us. You know, we've done things like that to get them on the same side of the table. I'm giving you guys all the secrets here. But we've even done things like that to get them on the same side of the table and get people aligned. You want to align their interests. I've never been a person. There's so many people that pocket watch on everybody else within the transaction. If you are getting a good return for your investors and it makes sense for you, I don't necessarily care what the other person is doing. You know, I want to make sure all of our interests are aligned and we're all doing well on each project so that we can continue to keep this puppy rolling.
Yeah. I think it comes down to predictability of outcome too, right? Especially in the world of real estate development, and when costs can be all over the place and there's a lot of different moving parts, and being able to have that alignment of interest is definitely a part of having a predictable outcome, I think, as well too. So talk about your first real estate development deal. You know, you started off in, you know, real estate development, working for a firm. You got the juices to go out there and do your own deal. Like, what was that first deal? And you know, maybe give us some numbers, or you know, if you guys already stabilized the project.
Yeah, so my first one was a little bit different because it was a family office type deal. Somebody had knew that I was wanting to go out on my own, and he had a piece of land, and so that one was a little bit already teed up. But I'm going to go to my favorite deal, and also probably the hardest, which was one of my most recent ones that we closed on. And so that was about 149 units. It's out in Highlandtown in Baltimore. We had realized that there was a huge demographic shift where incomes were coming up in the neighborhood, and it was one of the top growing neighborhoods in the U.S. It was like number 11, which was awesome. So it's like this was from a micro scale, this was a unique outlier in the Baltimore market. And so we went over to Highlandtown. I had a friend of mine from high school show me a piece of land, asked me what I would do with it, told him I would do housing on it. I immediately went out and put it under contract, and that's a huge gem. Put it under contract in your name. He who controls the land controls the deal. It's super important on the real estate development side. So I put it under contract in my name, and I immediately went out to go start raising money in order to do the design.
Now, when you say you put it on the contract in your name, you're talking about your personal name or an LLC?
in an LLC
Okay.
in my company's name. So in CLD Partners name, I went and signed on the dotted line. Yeah. So
Okay.
that was the first step. And what's been interesting is that I've been able to do a lot of this with no money down. So that ended up being about a $34 million project. I didn't have to put any money up front into it. And so the secret was I got control of the deal by getting the land. As soon as that happened, I had a huge problem, right? We have a large deposit due. The land cost about $2.5 million, right? And so I had 30 days to come up with a large deposit to stay under contract. So I immediately basically went on a press run trying to find partners in this. And I had talked to several people that I had been improving relationships with a couple firms, and I had a local firm who had done some work in the area, and I approached them and said, hey, look, I've got this piece of land. Would you be willing to go 50-50 with me on it? And they said, okay. I said, what I need is I obviously don't have the capital to one, put the land under control, but two, to get it to the point where it can get to financing. So in order to get the land to financing for a development project of that size, it can cost you $1.5 million. Literally, after 2 years of work, we basically had a stack of paper that was this thick that was worth $1.5 million. That's literally all we had to show for it, and the project could have still went left at that point. And so we ended up partnering up. They came in, they put in the money for the pre-development, which ended up being great. Went through the whole entitlement process, and my side of the deal was I'm going to run it from start to finish. I'm going to do the sweat. I'm going to put the land under contract. I'm going to hire the design team. I'm going to manage the design team day to day. I'm going to work through all the entitlements, and we ended up having issues with easement and land control. There's all types of things that pop up. We had a 10-inch sewer line running through the middle of the property that screwed everything up. We had BG&E poles. There's all types of things that go wrong throughout this. So I'm going to run the day-to-day of the deal and then eventually get it to financing. So we end up spending basically 18 months getting through permitting, entitlements, and all that. And this basically gets us to March of 2020. So now we've got a permit and we are ready to seek financing. It was a $33 million deal. We needed $8 million? I think $8 million in equity. Anyway, we needed maybe a $25 million loan from the jump, right? And so we went out to go get that loan on March 1st. By March 20th, we had a little thing called the pandemic hit. And
oh boy.
And
that was probably fun.
Yeah. And the financial markets completely froze at this point. So we went from being able to get 65% debt on the project to only 50%. So our equity requirement just went up by $3-4 million overnight.
That's tough.
Yeah, it's very tough. And this one was particularly hard because, one, I had been in business for a while, but this was the first big project that we were getting going. And candidly, we may not have made it if we didn't get this done. And so I had a lot riding on it, trying to get this done. And we just had to start improvising. So we ended up trying to put together this capital stack. We ended up finding a source of financing called CPACE, which is energy efficient financing. That came in and that got our LTV, our debt, all the way up to 80% from 50%. So they came in and plugged 30%, which ended up being
that was great,
beautiful for us, right? And it was only at
a large gap right there.
Right. So it was at a very reasonable rate. It was very close rate to our construction debt. It wasn't 12 or 20 like some of these other mezzanine type financings can be. So that was awesome. And then to get the equity, we ended up crowdfunding it. So we went to a company called CrowdStreet. We signed up, went through an extensive vetting process, and it ended up being a great platform. It's just a very, very serious type of deal. I thought that the vetting would be different for something like this, but it was even harder than other equity sources. So went through this long vetting process, did a webinar, basically went to go raise money from people across the country, ended up raising part of the equity we needed, about $4 million. We got the other $4 million from a private equity firm out in Denver. And at that point, we had the capital stack and we were able to get under construction and get it going. And now that it will be done in we'll be delivering our first units in November, and rents are looking good. So we're feeling confident and bullish on it.
What an amazing story. The first thing that jumped out to me was when you said get control of the deal, right? And I read Peebles Principles too a few years ago when I was getting into this space, right? And that's something that he talked about, right? I think he said controlling the deal is more important than cash. Yeah. And once you have control of the deal, now you can go out there and you can talk and you can make certain moves within this space. Because if you didn't have control of the deal, you know, there are people out there that might try to go behind you, right? And they probably would have saw this great opportunity. But the fact that you took the risk to get control of the deal, even when you didn't have all of the money lined up, right? You had to go out there and raise it. But the fact that you have control, now we can play ball, right? Right. That's something that's super important, right?
Right. And also from the People's Principle, we talked about getting stuff under contract. Their price, my terms. That was the good thing. So we give them their price, exactly what they wanted for the land. We're gonna overpay for it, and we're gonna overpay a little bit for it, but we're gonna get our time to be able to take this through the entitlements and still get it done.
And that was the same option structure that you use, right? For that we talked about earlier on.
Exactly. The same principle over and over again.
That's a page right out of the book, man. That's an amazing story.
I owe him a fee or something. I got to let them know.
You got to send them a DM or something. Yeah. That's really cool, man. That's a great story. The fact that you were able to really push through, even though there were a ton of obstacles from a crowdfunding perspective, or just from COVID, and trying to bridge the gap between the 50% and the 80%. And I'm sure there was, a lot of rough nights, but I think it just comes back to just your tenacity, right? From your character of just, by any means necessary. When I think of you and I hear your story, that's what I get is by any means necessary, I'm going to get a shot. And, when you're able to put yourselves in positions, you put yourself in a position to be successful and actually get that shot, right? So, again, that's a really amazing story. So what challenges are you facing today in real estate development, and why not just look at stabilized deals? I mean, we have the construction issue from supply chain management, or maybe the labor force. Like why real estate development, and maybe what challenges are you having today, and why not just focus on just acquisitions?
So the short answer is we are doing acquisitions too. I think that's another leg of the stool that helps make us, recession resistant. So we have that, we have affordable housing, and we have regular market rate ground up. But our core business is still market rate ground up / workforce. Our market rate is a little bit different. Instead of being on main and main, we like to be on second and second. We're in emerging neighborhoods with diverse demographics, which is really like our bread and butter. That's what we really like. But in terms of ground up development, what's really hard here, you hit the nail on the head when you said supply chain. Construction costs are going crazy right now. Not only that, there's a ton of unpredictability. You talked a lot about certainty of execution earlier. It's become a real issue. So on that project that we just talked about, we just ran through the whole deal, our switchgear is basically a piece of electronic equipment that allows you to power the whole building. It distributes the power throughout the whole building. And I mean, it's essential. Why it's essential early on during construction is because there are several finishes that are vulnerable to the elements as you do construction. So humidity, for instance, can ruin flooring. And so your flooring contractor will not install your flooring if there's a certain amount of humidity. And we can't get rid of the humidity if we can't fire up our air conditioners. We can't fire up our HVAC until we get to switchgear. So switchgear ends up being a real issue with getting on schedule. Well, our switchgear disappeared overnight. And you have a situation where it's such a competitive market that you have people offering. I mean, we had somebody offer $100,000 to take our switchgear, and they'll sell it to them. They'll sell it to them. You lose your switchgear overnight if you're not willing to pay the piper. So we ended up having to really, really drill down on what time things will get there, and making sure that we're talking to each of our suppliers and we're getting stuff on time. On top of that, there were huge overruns caused by the pandemic. Luckily, we did a decent job of controlling it. One thing that we did with so for our wood, which was the largest scope of work in this particular job, right? This is probably, I had to guess, $8 million worth of wood. And so we ended up, at the time when we started our contract, wood was through the roof. Wood was up over 100% year to year. It was going crazy.
It was a crazy time. That was a crazy time, man.
It was a crazy time. So you know what that does to a budget. That completely blows. You can't just double a price in a budget. And so what we said, you know, we're already here. We're kind of in this cowboy mode. Let's just keep moving forward. Let's not buy the wood yet. Let's not lock it in. Let's hope that it's going to come down to a reasonable level. And so we rolled the dice, and about 8 months later, we ended up locking in a price for the wood that was cheaper than what it was originally. We actually saved a little bit of money on it. But if we had waited 3 weeks after when we actually pulled the trigger, it had popped right back up and we would have been in a bad situation. So we got bailed out a little bit there, but that's just kind of the supply chain type of juggling act that you're having to do right now.
Yeah. Lumber was just crazy over the past 12 to 24 months. I mean, I think right now, the last time I looked at it was this a few days ago, and you know, it was trading around like 500 to 600 per board foot or something like that, which is great compared to where it was 12 months ago.
1,200, 1,400, 1,600, it was going crazy. So
that's yeah. People were stealing lumber out here. You know,
Yeah.
it was just out of control. But yeah, I would imagine how, you know, just looking at, you know, what you projected and just seeing the numbers just go astronomically, you know, it was probably a tough time to kind of stomach that. But you definitely, you know, took a gamble, I think, with also just waiting, right? Because like you said, you know, you waited for 8 months, it went down, and then 3 weeks later after that, it went back up. So it's I could only imagine the challenges in real estate development today. So tell me a time where you felt stuck and frustrated in your journey. You know, you've had a ton of experience transitioning into, you know, being a principal of your firm, and you know, talk about somewhere in your journey where you felt stuck, frustrated, you know, maybe a breakthrough moment where you were able to maybe develop some processes or hire someone or something that, you know, helped you get to the next side. Maybe our listeners today are going through the same struggle and would love to kind of benefit from you and how you overcame that.
Yeah, I think the breakthrough moment would be a part of that deal right there. You know, we were having a lot of trouble. So the thing about real estate development that's interesting is that you don't get paid a lot of cash flow for a while. It takes a very long time until so it's going to take you 2-3 years to build it, right? And then you get the building, then you have to lease it up. So you've got another 12, 15 months of lease up. And then you don't get paid until like maybe a year after that out of cash flow and stuff like that. So in order to keep, it's extremely, extremely capital intensive business, which is why the business looks the way it does. It's usually older people who have had money for a while that are in the business, because it's very hard to support yourself in between. So trying to get these projects through approvals and stuff, and at the same time trying to figure out how to eat, was a very, very difficult thing. And what ended up happening for me is that I ended up starting getting creative and not being afraid to, you know, ask bold questions. And one of which was, hey, look, if I bring you this project, can I get paid part of my fee up front? Like, if I bring you this value that will get done, can I get my fee up front? And so that has been huge for me, just not being afraid and like humbling yourself to ask those questions, because I don't like asking anybody for anything, right? Like, it's just not, it's not in my nature. I don't really enjoy it, but at a certain point you need to do that. And I think the biggest thing is do everything you can to try to make yourself successful. So I will write down what are the 10 to 20 things I can be doing right now to try to help myself. And the thing about entrepreneurship is that you are not guaranteed that any of those will work. So the only recourse, the only way to prevail is to just do everything you can and hope one of them works. And so that's what I've done. You know, you got to have the grit to stay in there and trust that if you do the right thing, you treat people right, and you do everything you can, that'll work out. Because a lot of times it involves you taking a step forward without being able to see the path. You know, I never saw the next step. I didn't know whether or not I was going to make it through that project. And there's been a million different moments like that. But keeping the faith and doing everything you can to help yourself is the best course of action.
And that's part of, I'm getting excited, man. That's part of the mogul marathon, you know. That's the stuff that people don't talk about. You know, we sit on here and we look at these IG reels and we look at these, you know, beautiful pictures when people post, I just close this and that. But like, to get to that high level, like, you have to, for the ones who started from the bottom, from the ground up, with no money, just working, trying to make, you know, trying to create a destiny for themselves, trying to create their own path. You know, that is what you have to go through. You have to, you know, have sleepless nights, right? You have to put things out on the table, even though you might not be able to put it back into your pocket, right? You have to find a way how to eat, especially in the world of private equity, you know, where you make most of your money on the transaction side, whether it's the front end or the refinance or selling after the promote. You know, there's the in between side of things, you know, and for me, you know, that's where my cash flow portfolio comes in, from the single family stuff, right? And allow you to kind of keep things going and keep the lights on and feed yourself, right? That's the stuff that people don't talk about, like, in this business. And so I think, you know, when you start to really you know, do things on a higher level and control the economics within the deal, that's when I think things just start going crazy, right? Astronomical, you know, where you start getting those huge checks and you start kind of elevating your business on a different level when you start creating, you know, being able to create the economics, control the economics, you know, better, as opposed to when you start off and you might have to give things up, or, you know, you might have to negotiate things a little bit differently because you have to get by. That's a great point that you just made. So, you know, Chris, let me ask you something. You know, what's your secret sauce to success? I think I already know a little bit about it. You know, I would say your hustle and your grind, but, you know, to you, what's your secret sauce?
Yeah, I mean, you hit the nail on the head. I mean, it's persistence and it's grit. I wasn't number one in my class. I wasn't the smartest guy. I wouldn't have blown you away with any of that, but I am persistent, and I think, a good job at strategy. I am able to distill a business plan or decide a path to go based on previous knowledge. And it's really about not recreating the wheel. These people were successful ahead of time. Let me work backwards. What were the 5 things they did to make them successful? And just following that path, and it works out. But grit, to be able to hang in there, is the biggest thing that will determine your success, I would say.
Yeah. I think copying your way to success. You know, I copy things all the time, and I'm not afraid to say it. You know, I'm looking at other people's playbook. You know, that's the same thing that I've learned from my, you know, time within sports, right? Or just in the NFL, right? Where I'm constantly looking at somebody's playbook. I might follow someone on social media just to see if they have a playbook. I might not even know anything about this person, but hey, they posted this, they look like they did this. Let me just follow to see, you know, if they can give me any clues, right? And success, you know, always leaves clues. You know, never try to reinvent the wheel unless you want to deal with a lot of pain and a lot of headaches. So, you know, if you were to start this whole thing over, is there something that you would do differently in your journey?
I would say that, you know, we've had a lot of success. I mean, we've grown a company from 0 units to now about 800 in development, about 200 million. We've done well. So it's hard for me to say that, like, I would have did something necessarily differently, because I'm just thankful for that. That's somewhere I never thought that I would be, especially at this time. But one thing that I would say, and one piece of advice that I would give people, is what we touched on earlier, is don't go for the sexy, the big project necessarily. I mean, that stuff is great. Love doing it. We'll continue to do it. But focus more on what is the net to you. That's a super important metric. So if you can buy smaller things and you can control a significant amount of deal, 50%, 100% of the equity, then look at deals like that too, because that's important to build a foundation and build your foundation of passive income, because that's going to be your moat. What I started doing was I had these large projects that, took 3 to 5 years to execute, and they were great once they did. But the issue was I hadn't solved the passive income problem before that. So I was end up having problems. I mean, I had trouble paying rent, so sometimes we had some real moments in there. But if I had built up my passive income portfolio first and I had that moat to protect me in that foundation, it allows you to do the bigger stuff. So I would say start small, try to own as much of your assets as possible, and then start to scale up. So that's one thing that I probably would have did differently, but I have absolutely no complaints of how my career is went.
That's I think that's golden right there, because I think a lot of people get lost in this business thinking, I got to go buy this big assets, or I need to have this, 500 unit portfolio, and I need to go, buy this or syndicate this, like, this 1,000 unit portfolio. But, what are we in this business for? For me, I'm in this business for generational wealth and cash flow, and people have different strategies. Don't get me wrong, but I think there's this conception that, you should just go out and just, do these large deals and have this small amount of profit. But, I think the reason that we all came into real estate was to get financial freedom and cash flow and generational wealth,
Yeah.
And so how you get to that point is everyone has different methodologies, but I think remaining to that core and, like you said, building that foundation, especially when you're getting into real estate private equity, when things can be more transactional than just a regular fix and flip. For people who are trying to jump from a fix and flip, which is like 6 months or so, compared to your projects, which is like 3 years, to turn things around. It's a total different ball game. So, man, that was really golden. So, Chris, let's talk about your development. I know that you wanted to talk about some things regarding that development, which we already kind of touched on, but I think you're working on also another project called the Sheridan Affordable Housing Project in DC.
Sure. Yeah, we're working on a project called the Sheridan in DC. It's my latest muse, and it is about 70 units. It's in Ward 8, and I think what's really great about that, I mentioned earlier, we like working in diverse communities that look like us. That's a huge thing for me. And also, I really pride ourselves on being able to do the full spectrum of housing. So we can do your luxury market rate on the waterfront, if that's what it takes. It's not necessarily a favorite, but what we really like is mixed income. So we want to provide a certain amount of units that are affordable. We want workforce housing, teachers, doctors, whoever. We want to make sure, teachers, nurses, whoever, we want to make sure that they have a place to live. And the people that really run a city, can actually live inside that city. And in DC, there's been a real challenge with that. And so what I like about the Sheridan is that we're not just trying to do affordable housing, but we're trying to do mixed income housing. So instead of just doing the tax credits, which basically limits you to 60 or 50% of AMI, we're going to stretch it all the way to 80% by doing income averaging. And we think that that's good for the neighborhood, because you want all types of incomes in a neighborhood for it to really be successful. So I'm super excited about bringing that. It'll be the first mixed income building like that, a first income average building in Ward 8, maybe one of the first in DC. I think it's just really important to try to bring that product to a neighborhood that could really use some inclusive new development. So we're excited about it.
That sounds like a really, really good project. I'm excited to see it come to fruition, being from your backyard, DC, Maryland, and I'm sure that's going to be an amazing project for the area. So, Chris, man, I really appreciate you being on the show. I mean, we talked a lot about just your journey, how to get into real estate development, what things to look for, building a team. You touched on some things about building a foundation before getting into real estate development. So there were a ton of golden nuggets in today's show. So thank you for being on our show. Thank you to the listeners today for tuning in to the Mogul Marathon Real Estate Podcast. And just remember, real estate is a marathon, not a sprint. Run your own race. Thanks, Chris.
Definitely. Thank you, man. Enjoyed it.